following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have.
It's a beautiful thing. Get our man, Jim from Minneapolis. We gonna take him by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Hi, everybody. This is Basil Chapman. Tom O'Brien's not here. I'll be sitting in for him right now. So the Dow closed down 10 at 25,792. Intraday, it hit 26,086. Can you believe that it's had a 1,000 points, the quickest I've ever seen a 1,000-point move in the Dow? That's gone from January the 6th, I believe. Yep, there it is, 25,000. There it is. So, yeah, January the 5th. And here we are. It closed at 25,792. Sharp pullback. Very interesting intraday move. It gaps up, spikes powerfully higher, goes 240-something points higher, and then pulls back very sharply. It drops. In fact, it goes from 26,086 down to 25,702. And then it closes at 25,792. So, make it real easy. This is the daily chart on the left. In the middle is the weekly chart. On the right is the monthly chart. On all the charts, you'll see I have what's called the MACD, the moving average convergence divergence, the slow stochastic, and the blue line is the unbalanced volume. Tom likes to use volume. I use a cumulative volume. In other words, if the Dow closes down, you subtract the total from the running total, and if it closes up, you add as a running total, you just add it. And you can see it just turned down here for the first time. I said to subscribers to my opening call, my service here at TFNN is I have the noon to 1 p.m. Eastern time slot. That's called the Tiger Technicians Hour. And my daily service, my daily newsletter, very comprehensive newsletter, is called The Opening Call. In my opening call, I say, we've got to watch this real closely. And one of the reasons we've already started on last week, on Friday, we started to buy a little insurance on the Dow because we have 7 long positions, all of them doing really nicely. We need to just kind of protect that. I said we're not treating it as a trend right now, but it's the start of a potential turnaround. We'll see what happens. So the daily chart, the technicals are very strong, just hinting that there's a little bit of a pullback here. The weekly chart is still extremely strong in all the technicals, just a hint that there could be some kind of volatility coming up based on the relative strength and the unbalanced volume turning down a tad. And the monthly chart is still really powerful in leg E. When you're looking at these notations, just keep in mind that it's a real simple technique I have. I try to identify the lowest low bar, and you merely count each successively higher bar. 4 peaks later, alphabetize them alphabetically in sequence. At D, other things can happen. It can go E, F, and even G. But D is where you start to look and say, okay, what's going to happen here? Well, we went to a D back on the December the 4th at 24,534, held this 9-period moving average. Look at this black line. This is the 9-period exponential moving average. Look how strong it has been in the daily chart. Look how strong it's been in the weekly chart. And look at that monthly chart, way down 23,290. So for subscribers, we have a long position, a small long position in the Dow from the 22,290 level, still holding that as a core position. Now we've got a little bit of a short position to see if we can take advantage of it. Let's just run these through. So the key level, 25,400, is the 9-period moving average that needs to hold in the Dow. The S&P down 9 at 2776. Also ran very sharply higher, went to 28,000, 2807, I keep saying that. It's 2807. and it closes at 27.76. The level to watch, 27.51. 2,751. A close under that will be the first time it's closed under the 9-period moving average. Actually, it's only the second time since it broke out above that 9-period moving average way back in November. So it'll be quite something. Weekly chart is still strong. Let's go to the QQQs because of the index 100. There was a trend line that I showed subscribers over the weekend. This trend line right here, it hit it almost exactly at 166.41, closed down 25 cents at 164.24. That's over 2 points lower. Watching 162.20. A close below 162.20 says, uh-oh, timeout coming. Weekly chart still very strong. Monthly chart very strong. IWM is the Russell 2000, goes to a peak E, pulls back very sharply from that E, but it hasn't made a peak yet. And we're going to be watching this. The level to watch is at 156.40, down $1.75. Anytime it closes under 155, I'd say be careful. The Russell 2000's in a little trouble. I still see a little residual strength. How it's going to play out, we'll see. Gold right now, down. It's up 4 at 1339.1. It should still go to that leg D. Remember, we're talking about fourth leg higher. This should go to a leg D, maybe tomorrow, the next day. Watching this closely because it's making a cup formation in the weekly chart that says it should hold 1325, because if it goes under that, 1317 is going to be really important support. However, the weekly chart says that if it can push into the 13, it's at 1339. If it can go to 1347, 1351, there's a real good chance it's going to try for the left side high of the week of the 8th of September at 1366.9. We can have an expert on the commodities coming up in a moment. We get Andy Hecht. In the meantime, let's look at the dollar. The dollar tried to rally earlier on, kind of failed. It's at 90.39, down 3 cents. It made this arch formation. I just want to talk about this for a moment from my CD introducing the Chapman Wave methodology. There's a pattern that we call the dreaded HY, because if on a down move, it makes an arch formation and takes out the left side low, it can keep going lower until maybe it bounces and has an even bigger cup formation. So let's just get out of this and I'll show you something very interesting. Look, right here. This is Bitcoin. Look, there's an arch formation right there. Arch formation, it fails. Another arch formation, it fails. Here's another one. I had a caller this morning on my show. I said, let's be careful. If it breaks underneath 10,810, could go lower. And here it is down at 10,717. So this is it's a viable pattern that if you learn how to use it, it can be very helpful in the analysis. So the dollar looks like it wants to go down to the 89.65 200-period exponential moving average, going way back, and that's in the monthly chart. And wow, it hasn't been there for a very long time. So I wanted to show the TLT, which is the bonds, the 20-year Lehman T-bond at 125.04. If it bounces to the 126s, we might see money come out of equities and some of it go into the fixed income. I'll be back straight after this break. Basil Chapman sitting in for the one and only Tom O'Brien. Be right back. Dow was down 10, S&P was down 9. Right.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman sitting here for Tom O'Brien. My show is usually noon until 1 p.m., the Tiger Technicians Hour, and that's when I take questions and answers and we go through the analysis just like we do here, like Tom does in this show. And my daily service is the opening call, and we have a special guest right now. We have Andy Hecht. If anyone is an expert in the commodity area who we need right now, let's go to Andy. Hi, Andy. How are you?
Hey, Basil. How are you? Happy New Year.
And a happy new year to you. So, interesting market.
Absolutely, absolutely. And I mean, all focus right now is on the U.S. dollar.
But Andy, before we do anything else, tell us what you do at TFNN so everyone knows, please.
Oh, okay, sure. I have my show is coming up right after you're done today, from 5 to 6 Eastern Time, the Commodities Hour, where I run through all of the commodities that trade on the futures exchanges. And I also have a newsletter, the Daily Essential Equities, as well as the weekly Technical Commodity Report, which comes out each week. The Daily Essentials comes out each day, where I give a wrap-up and basically some recommendations, usually commodity-based, on using ETFs and ETN structures. And you can get those by going to newsletters on the TFNN website. But I guess the all eyes in the commodity market are on the dollar, and we've come out of the gate in bullish mode, certainly. Precious metals made lows in December like they did at the end of 2015, 2016. They did the same thing in 2017 in December. Gold found a low, and it's been really moving since then, trading up to 1345 yesterday and today. And the one disappointing thing about precious metals here is that silver has not been able to get up above 1750. And I have a little bit of a theory about why that's going on.
Tell me about it, because, the silver for a while now has been the laggard, and it was one of the reasons why I was expecting a move in gold a little later that would combine silver, but instead silver has run up. It has run up very nicely, but it isn't quite as strong as one would expect. Tell me what you think's going on.
Silver is the most volatile precious metal. And it's the one that attracts speculative interest over time. I do believe that this craze in the digital currency market has diverted the attention of people who are looking for real action in markets and big percentage changes. And I think that it's drained some market action away from the silver market. Now, gold investors are different. They're more looking for store of value. They're more looking for hedges. Silver, the hordes that come into silver, that come and go, that cause the big price rallies and the big price dips, they're action junkies, Basil. And I think what we're seeing here is we're seeing Bitcoin and Ethereum and Ripple and all of these other digital currencies. You know, the percentage moves there are so great. And I think that what we could be seeing is that it's draining some of the market action, the volatility away from the silver market, quite frankly.
So in other words, if I'm reading you correctly, silver, is it because of the low price, because it's $17? Is this one of the reasons? But it is treated more as a speculative area.
Absolutely,
it has been?
Absolutely. It always has been a very speculative metal. And you know, there's no place better for speculators to go these days than to digital currencies. Right. So I think that it's drained it. And I think that we've seen a little bit of decoupling between gold and silver because of that factor. Now, if silver were to break out above 1750, I think you would see a rush in to buy silver. But silver's been having a very hard time with that level. And each time what do we get up to? 1745, and we failed again.
Do you think it's 1750 or the previous high in September, which was really around about the 1830s?
You know, yeah, there are two levels there. But if we look at a weekly chart here, and I'll put it up, you know, every time we've gotten up to this 1750 level since, you know, September, that thing just pulls back. And, you know, this is like kind of a wall. So I think this is, you know, silver is building cause, certainly. Listen, it's not far away. And I do think that eventually it will blow away 1750. And I think that
in the monthly chart, the difference now that I see is that silver, the technicals, the MACD, the moving average, convergence, divergence has sort of flattened out, and the stochastic has been rallying with the unbalanced volume. This is the first time the technicals have really improved. The price isn't there yet, but the technicals improved. So it does have a springboard, and it also has support. So I'm going to be watching this very closely.
Yeah, I do like silver here, but I do think it's very frustrating, and you need kind of nerves of steel and a lot of fortitude to be long the silver market right here. I would buy it on dips, no question about it, but buying it for a breakout the last couple of months has been, you know, a frustrating experience.
Yes, right.
So, you know, and as far as the other commodities, look, crude oil is as bullish today as it was bearish in June. And I do think that we're going to see a lot more production out of the shale regions as the weather warms up. And, you know, last week we had a gain of 10 rigs from Baker Hughes. So, you know, still, could oil run out of a little bit of gas here? Is it overdue for a correction? Absolutely. Open interest is getting up towards the all-time highs, so it's a little concerning there. But the economics behind crude oil remain strong with good GDP growth, which is leading to, you know, lots of more demand for oil and oil products.
So what you're saying is that the demand is being used because of the increase in basically the economies around the world. Is that correct?
Yes, exactly.
Yes, okay.
That's what I'm seeing. I mean, look, the U.S. economy is growing at over 3%. You have Europe is growing moderately. You have China using more commodities here. Listen, we see it in copper and those things. And let's talk about copper for a minute, because copper is a bellwether. And copper got up to 332.20. Which I think was a little bit of year-end window dressing. And I think the copper market's paying for that now. We have a little bit of a correction here. We're down. We took a look below 320. We popped back above 320. I like copper here. I think that copper is going to go back to above $4 either in 2018, 2019. I really like the pattern of higher lows and higher highs in the copper market. But right now, could copper fall back to $3 a pound? Absolutely. This is a market that you buy on weakness. You do not buy it on strength.
And I see that for my work, I've got a cup formation in the monthly chart, and it has what I call left side, right side price time match. And it says that sometime before May, it should retest the high that was made from July of 2014 at 3.44. So that looks to me,
right.
Yeah.
That's the next target, no question about it. There's a couple of steps up there, 3.44, then there's one in the 380s, then there's one at 398. But I do think we'll get $4. I think China's a big buyer of commodities here, and I'm seeing strength across the base metals. I'm even seeing some strength in iron ore prices here, which is certainly a positive. Now, on the negative side, Basil, agricultural commodities are suffering from Mother Nature's perfect environment. The thing that could really lift the commodity sector this year is if we don't have the 6th straight year of bumper crops for grains, if we have problems with soft commodities, and that could really make commodities blast off. I do like the sector, given the weak
Andy, we've got a break. If you can hold through the break, I've got a couple of questions to ask you about the Thomson Reuters Continuous Commodity Index. Can you hold on?
Sure.
That'll be great. We'll be back with Andy Hecht in a moment. This is Basil Chapman sitting for Tom O'Brien. Dow was down 10. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. The Dow screamed above 26,000 and then closed down 10 at 25,782. Whoops, is that 92? 92. And then the S&P at 2776. is down 9.82. And we're on with Andy Hecht, whose show will be coming up straight off this at 5 o'clock. Andy, so you were talking about commodities, soft commodities. Yes.
Mm-hmm. Yes.
So what strikes you in the soft commodity area that could change over the next, say, 6 weeks, whereby would impact the entire commodity index?
Well, each year is a new adventure in the agricultural space, and we're going into the 2018 planting, growing, and harvest seasons. With very big levels of stocks. Record levels in wheat, big levels in corn, but I have to tell you, the one thing that's really interesting about all of these grains and even the soft commodities, if we look at very long-term charts, Basil, we go back 20 years or so, you will notice that whether it's soft commodities, grains, animal proteins, we have been making higher lows. And that's a function of demographics. More people with more money chasing more finite commodities each year.
Okay.
Back in 1960, there were less than 3 billion people on our planet. Today, there's 7.445 billion.
Over double, correct.
Each quarter, the population adds another 20 million people. That's another 20 million mouths to feed.
That's incredible.
The bottom line is that the next time we get a year where the weather doesn't support crops, whether it's corn, whether it's soybeans, wheat, sugar, coffee, cocoa, any of these things, you're going to see prices scream. And the downside, I believe, in all of these agricultural commodities pretty much is very limited if they are close to the lows. And that's what we're seeing. So, I don't think there's a lot of risk when it comes to long positions. I think that, these things need some kind of supply issue to break higher, but I think that on price weakness, it's pretty safe to stand up and buy some of these commodities. Now, if we do get a situation where weather doesn't cooperate this year, these commodities could scream. And if you put that together with what's happened in oil, what's happened in copper, what's going on in gold, the bottom line, Basil, is we're going to see these indices, whether it's the ETFs that are commodity based, whether it's the Goldman Sachs Commodities Index or any of these other types of commodities indices, they will scream to the upside. And that could, ignite. I think there's a lot of inflation in the environment here. Stocks are certainly financial inflation there. Bonds have been telling us recently that there's fears of inflation. And look, even if the Fed were to raise interest rate 5 times in 2018 by 25 basis points, we'd still be at a 2.5% Fed funds rate, which is very low.
Very low. Very low.
Right.
Yes.
Right. So the price to pay for a decade of accommodation in the United States and in Europe when it comes to monetary policy could be inflationary. And I think we're seeing signs of it. And I think that commodities are going to do very well. Again, buy dips, don't buy rallies. These are volatile instruments. So, like in something like silver, don't buy looking for the breakout. But when it comes down to, take a peek below $17, that's a good place where the risk reward favors buying. Same thing in corn, same thing in soybeans, same thing in wheat, same thing in all of these raw material markets.
Well, Andy, that's exactly why I wanted to have you come into the second segment here, because this is exactly what I wanted to know about. What would be the manner in which the other commodities, unlike a gold or a crude oil, other commodities could start to play into the hands of the Fed, they keep saying they want inflation. They might be surprised how quickly inflation comes about. For those of us from the 1970s who remember inflation, where you had to go to the post office every couple of days to check on the price of stamps because they were going up. Hope it doesn't get to that point, but we're still very low.
They want 2% inflation. They don't want 5 or 6 or 10% inflation.
Definitely don't want that.
Possible, right. Which is very possible given what's going on. And by the way, the ECB is taking their sweet time moving from negative 40 basis points and their QE. And the economy there is screaming for them to act. By the way, that is a big trigger. I think the ECB is going to act in 2018. And I think when they do that, that could really push the dollar lower. And that could really ignite commodities and inflation. So that's what I'm keeping my eyes on here.
Well, thank you very much for that. So Andy Heck comes up straight off this at 5 o'clock Eastern time, folks. Great program. I always seem to learn something that I not only didn't know about, I just didn't even know that I didn't know. So it's fabulous to listen to. Hey, thank you, Andy, so much.
Thanks,
and folks,
Basil.
Check out the front page of TFNN to see all about Andy and his newsletters. Thank you, Andy. Have a great day.
Thank you, sir.
Thank you. So, folks, I had a bunch of email questions here. Let me get to them. So there was a question about the IYT, which is the iShares Transportation Average. It's the ETF. It's the Dow Jones Industrial Index, the Transportation Index. So it closed down 2.82 at 202.50, all-time high. LAE in my work, MACD is good, stochastic's good, and the on-balance volume's good, but they all just dipping down a little bit. So I see Dave White just sent an email, a text to the den saying CSX is down 1%. So what I'm looking at here is that I keep asking that question of myself. I'm saying to myself, in my notational work, whereabout are these indices? Is there any chance that, for instance, this morning when the market just gaps up huge yet again, people just throw up their hands and say, we cannot short, we've got to buy, this is impossible, it's just going up, up, up. And then all of a sudden you get that 400-point reversal. Is that a sign? And I say, yes, that is a sign that the market is becoming somewhat overbought. Does that mean to say it could crash? No, but I would like very much to see a digestive phase. Look, the IYT trading at 202 went to a high this morning of 207, was it? 206.73. Closes at 202. No big deal. It hasn't even made a peak yet. But if it begins to close under the 199 level where the 9-period moving average is, look, that'll be the first time that it's starting to close under it since it broke out back in November above that black line in the daily chart, that 9-period exponential moving average. If you're looking, talking about 9 DMAs, Dave White's got a webinar coming up tomorrow night. It should be fabulous. He's been working on the number of stocks above and a number of stocks below the 9 DMA, the 9-period moving average, and he's going to be giving a workshop on the conclusions, well, some of the conclusions that he's been looking at based on the material that he has. So tomorrow night, check out TFNN front page, and you'll see Dave White webinar coming up tomorrow night. So what I'm looking at right here is that the weekly chart is still extremely strong, and so is the monthly, even though there's a trend line that it just broke above, but it's in an E in the monthly and an E in the weekly, and it says, you know what, now's the time to start assessing and saying, okay, if there is a pullback, will it be a rectangle? Normally what I would do with a pattern like this is I just grab the top, grab that candle right there and say, okay, that's kind of the range that I'd be expecting if there was a pullback, and that gives you very good support around about the 197 level. We'll see over the coming few days. Basil Chapman sitting in for Tom O'Brien. Be right back straight after this break. Dow was down 10, S&P down 10.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. And we're looking at a Dow that was up 250 points. It closes down 10. It had a 400-point swing. Is that it? Well, couple of questions that I got, and we'll deal with them right now. For instance, the volatility index. So many of you hear it by name. You don't really use it, but it's called the VIX index. And it's a CBOE. Volatility index is trading right now at 11.66, up $1.50. If the Dow closes down 10 and the volatility index screams to 12.41, what we've seen over the past, might say a couple of months really, is that when the volatility index has a powerful move intraday and then closes kind of off that low, and the Dow didn't actually look, when the volatility index pops $1.50, up 14.76%, if you said to me, where is the Dow based, or the S&P based on the volatility index, I would have said, wow, the Dow must have closed, or at least about 175 to 220 points down. S&P probably was close to minus 15, minus 17. No, S&P was down not even 10 points, and the Dow was only down 10 points. So this says to me that the analysis is quite clear at this point for me. If there is going to be continued selling pressure, the volatility index will go above 12.41, but it should not go below 11. It should hold here, and the people that were buying insurance based on the volatility index should be anticipating that that volatility remains high. Because if the volatility says, I've used up all my strength, look what happened the last time I hit 14.58 on the 1st of December, the market, look at this. Let's go to the S&P. What did the S&P do on the 1st of December? Let's go all the way back here. 1st of December, it has one more day to the upside on the 4th. Remember, that's a long weekend. And then it pulls back only ahead to the 9-period moving average. And the next thing you know, it's up at 28.77. That was not 28.7, 28.07 today. So we've got to watch this real closely. So I'm going to make it real clear. Certainly, this is what I and my subscribers to my opening call be looking at. How does the volatility index remain? Look at the weekly. Look how many times you've got that thin wick, because intra-week it popped up. But by the end of the week, boom, down towards that 9-period moving average. So let me just make it real clear. As far as I'm concerned, a bear phase is when there is news that's pervasive, that just keeps coming, filtering into the market. The market perceives as bad news. Doesn't matter. Sometimes it's good news, but the market perceives it as bad news. Hey, maybe it's the funding coming up, that there isn't enough funding to keep the government going over the weekend, whatever it is. But whatever it is, if the volatility index screams to the upside with bad news permeating the market, and the S&P futures open down 13 to 15 points, try to rally intraday, and then close down at that level, 13 to 15 points, and the Dow is down triple digits, and you do that successively for about 3 out of 5 sessions, then you got a bear phase, at least shorter term. I'm not sure how that's going to work out, because as I see it right now, the fact that the market came back at the end of the Dow came back, even though the S&P was still down 10, means that there's some residual strength. So the VIX to me is going to be really important over the coming, what's today, Tuesday? Over the next 2 days. It might be as soon as tomorrow. The VIX starts to fall, and that's now at 1166. It goes underneath 10 point, well, it just doesn't have to do, it just goes under 11, and the general market is holding quite nicely. It says not yet. It means sideways action. So now let's look. That's the volatility index. Now let's look at something that might be a factor. And I'm going to go to the TLT just to show it in the different time frames. You see, it's really in a trading band, but look at this chart right here. This chart right here, if you can see it clearly, up there it is. The white lines, that's the 30-year T-bond yield, the TYX. The brown is the 10-year T-note yield, the TNX, and the cyan, light blue, is the TFNX, which is the 5-year T-note yield. This is in a leg C in the weekly, and it should go to a D. That means it's going higher. You see that these three yields are getting closer and closer together, like a flattening of the yield curve. This is something else we're going to have to watch really closely. So in the meantime, what we're really looking at is if the FNX at 2.355 or 2355 starts to push into the 2420 or 2440 area, I think that's going to impact the market on a short-term basis. Just to say, hey, this is we haven't had this kind of flattening for a long time. Be careful. So I think that yields could have a say in the matter. And what I'm also watching here is the iShares, the Global Timber Forestry ETF, made a new high today, but then pulled back quite sharply. This is an outstanding chart, but it starts at 74.12. Anytime it breaks this key support of 71, closes under that, it says, uh-oh, now the Global Timber and Forestry ETF, which has really been a leader to the upside, world economies, saying little slowdown there. And the HGX, which is the Philadelphia Housing Sector Index, made a high last week of 361.08, made a new high today of 361.24, closed down at 355, down 4.48. We're going to be watching those. So the signs are here to say at least some kind of a consolidation phase could be coming in. And I'm going to be watching this closely, because what I've done for subscribers is we're in different areas. We're in the construction area. We're in the infrastructure area. We have gold stock, which has done very nicely. Just picked it up recently. We have we got General Motors. I came back from the auto show here in the Boston area. I must say the stand, I was in talk to Andy about this in terms of the cost of living and people's expectations. The standard of automobiles in the auto show right across the board is the highest that I can ever recall, even in the least expensive of the cars that they had at the show. They had carpeting, had air conditioning, heating. Those were all options once upon a time. So this is standard of living. So General Motors has been helped by that, but I'm really watching it closely. It's at 44.19. It really needs to hold the 42.50, 43 area as support over the next week or two. That's very important. So a couple of things we want to look at there. There's something else that I think is very important. I was asked about the IBB. Just a real quick look at it. It made a leg D today, closed towards the lows of the day. It's done very nicely. It's trading at 111.28. it needs to hold 109 to 108.70. If it goes under that, it could go in for a digestive phase. So that's what we want to look at, a couple of things. I'll be right back after these important messages. This is Basil Chapman sitting in for Tom O'Brien. Dow was down 10. The S&P was also down 10. Big difference between the Dow down 0.04 and the S&P down 0.35. I'll be right back after these important messages.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman. So Amazon had a couple of questions. Can I look at Amazon, etc.? These are the biggies. Amazon was up 1 at 13.06. It had a high today, all-time high of 13.39. So E in the daily says it's a little overbought. F in the weekly and E in the monthly. The technicals in the weekly and monthly are still really strong. The daily is a little toppy. We'll be watching this one closely. Just make it simple. It's at 1304. 1259 is the 9-period moving average. I'm going to Google this alphabet. I like to call it Google. So Google itself is at 1122.33. It had a high today of 1139.91. It looks as if it too could go a little higher, but it looks like it's starting to get a little overbought. So this is how you can go through all of these particular charts. And of course, going to all-time highs like this is really important in order to sustain the up move. you really, as I said, let's just go back to the volatility index. So the volatility index starts to fall back into the 10s. That's going to give some support to the markets. And there's been a little bit of a difference here because the NASDAQ has played catch up, but the semiconductors needed to make that leg D today in the daily, and they went to that D in the daily. So we're looking at 102.82. Let's keep it simple. If the semiconductors, which have led on the way up and down all year for the last year, if the semiconductors at 102.82 start to break under 101, no, let's make it easier. Close under 99, it says, oops, time for a little bit of a rebalancing, a little timeout. That's the way I'm looking at it. It's not what can go up, it's the way we're going to hold support, and that's really important. So needed to go through a couple of those things. I missed one aspect, and that is if you look at the IWM, that's the Russell 2000, this sharp move, the big move down, this red candle after making a new all-time high, this is just usually the Russell 2000 early in January, going into January, that's usually the best month. So I'm really watching it very closely here. It needs to hold at 156. It needs to hold 154. This is Basil Chapman sitting in for the one and only Tom O'Brien. Tom will be back tomorrow. And thank you for being here. Have a wonderful evening. And stay tuned. Andy Hecht is coming up straight after this show right now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.